Hey, everybody. In this episode, we're diving deep into an intriguing sector of the market that many of you expressed curiosity about, pre-construction condominiums. Today, we're exploring the inside track, the fast lane, the first dibs. Yes, you guessed it. We're talking about platinum access. We all know that real estate investment can be a game of who you know, timing, and having the right information at your fingertips. Platinum access, or first access, is the golden ticket that provides early entry into hot pre-construction condominium projects, often before they're made available to the general public or even most realtors. So how does one secure this coveted status? What are the ins and outs, the do's and don'ts, the secrets, and the potential pitfalls? Today, we have with us a seasoned Toronto real estate broker who has been navigating these waters for 15 years, leveraging relationships with developers and providing clients with opportunities that are hard to come by in the bustling Toronto real estate market, Mr. Ralph Fox himself. Hi, Ralph.
Hi, how's it going?
Together, we'll discuss everything from pre-approvals, deposits, paperwork, and the fast-paced nature of this niche market to the relationships you need to build and the questions you need to ask. So whether you're a seasoned investor or just considering dipping your toes into the pre-construction market, get ready for an informative conversation that could well change your real estate investing game. Here we go. It's the first week of June, 2023. We are Fox Marin Associates, Toronto's most innovative and active brokerage in central and downtown Toronto. We aren't here to regurgitate boring stats. You can find those anywhere. We're here to share what we're seeing going on in the Toronto real estate market in real time on a weekly basis so that you can be in the know and make informed decisions. If you're interested in getting an up-to-the-moment opinion on what's happening in Toronto real estate right now, and learning what's going down, boots on the ground before it becomes a stat, then you're in the right place. My name is Ian Busher. I'm a broker with the FM team. Keep her number handy. This is Corey Marin, in-house hype girl and resident expert listing broker. And a good man to know, especially considering today's topic, Mr. Ralph Fox, our analytical, investor-driven macro picture watcher. We do this every week, so hit that subscribe button and join us for the latest updates every 7 days. Corey, I'm going to throw this over to you.
Okay.
I understand you've got some questions for our expert.
Our expert, Mr. Ralph Fox. Well, this is fun. Putting Ralph in the hot seat, especially today. Pumped.
Agreed. Yeah.
And I actually don't think there is anyone better that we could be asking and inquiring about platinum access to pre-construction condos in Toronto. And just to be clear to our viewership today, we are talking about what platinum access means. How do you get into projects early in the city? What are the advantages of doing that? What are the disadvantages? And we get a lot of inquiries about this, and it's very confusing and overwhelming if you just don't have experience with this particular asset class. And I know all of us here have worked with many buyers and investors that have purchased pre-construction. And I know that we all have personally invested in pre-construction as well and done very well in this particular vertical. So I think this is a great topic for our audience today. I'm looking forward to diving in. I love being the interviewer, and I will toss out Ralph's first question of the day. Ralph, first of all, please let our viewership today know a little bit about your experience with pre-construction and development in Toronto, what your background is, and why you would consider yourself to be an expert on the topic.
Wow, that's a great question and super awesome topic, something I could talk about for days and days, although I have been warned to keep this under an hour. So I am trying to keep time parameters about a subject that I absolutely love. And according to focus groups, I need to smile more as well. So that's something that I'm working on throughout my personal growth.
I do love those focus groups.
Yes.
I should have a private chat with them about some other stuff too.
Yeah, exactly. We should have a camera in our house. I think that would be really helpful.
It would be.
I don't think that would be helpful at all, actually.
Anyways, back on track here. I love pre-construction and development. I have been a perennial Toronto real estate bull for several decades now, and I've been investing in real estate for probably even longer than that. In terms of my experience on the pre-construction development side, we have worked with and partnered with several developers on the sales and marketing side, bringing a project to market and selling those projects through. So we definitely understand things from the developer lens. We also, and we are going to talk about what a platinum agent is, but we also are platinum agents ourselves. And I'd say over the last 15 years, we've probably had about 200 clients or so buy pre-construction. So we've represented clients on a whole bunch of these purchases and seen them do very well over the years. And then we ourselves and myself, we are pre-construction investors, and we've built out Corey. When I say we, I'm really referring to myself and Corey, but we've built out a portfolio of real estate properties, all of which that we've bought pre-construction. We understand it from all sides, basically. We understand it from the developer and sales standpoint. We understand it from the client aspect of buying. We understand it from the investment standpoint. And then we also can throw in the resale component when it comes time to selling a property 3 to 5 years down the road after it's built. So we have a pretty good feel for the topic, and it's something that I'm really excited to talk about and do a deeper dive.
So can you just quickly, and again, I'm just underlining the word quickly here, explain at a very high level what the pros and cons might be and the differential between a resale condo and a pre-construction or new built condo in Toronto?
Absolutely. And I feel like we're on the Academy Awards where if I'm talking long enough or too long, the music will start to come.
Your mic's just going to be lowered.
Yeah. Or maybe I'll get a shock on my chair or something like that. So
kicked under the table.
Yeah, exactly. Or all of the above. Resale, the advantage really is that you're buying something that you're physically standing in. And the timeline is very short from the time you're standing in it, if you're successful in the purchase of the property, to close. So very quick timelines, and what you see is what you're going to get, and you have the time and opportunity to actually do inspections and go through the property. So that's really what happens when you buy resale. And typically, because the timelines are so short, most of the purchasers are end users, meaning that they're going to live in it. You do get investors as well, but on the pre-construction side, it is much more heavily drawn to investors. And the reason for that is you're talking sometimes by the time you buy something to its completed 3 to 6 years window. And so if you're looking at moving into a property by buying that far out, your life could be in completely different circumstances. So typically on pre-construction, it's much more investor driven. And the idea of buying pre-construction is it's kind of like the idea of buying futures on the stock market, meaning the market is at a certain price, you're buying at a higher price with the belief that at some point in time, the market will even be higher and you'll have a profit built in. And that's how most of the buildings, condominiums, get built in Toronto these days, is through pre-construction and through investors. And the advantage to an investor is that you don't have to put that full 20% or large payment up front.
Mm-hmm.
You can space it out and stretch it out over time. And it's a very passive way to get into the real estate market or to have passive investments over time that can pay out. And I would say that our typical pre-construction clients on the purchasing side are generally couples or a family, and they've done very well on their house and they've seen the equity grow on their principal residence. And then they've seen the market continue to go up, and yet their RSPs are remaining flat. And all the other investments are way underperforming what the real estate market is doing, especially with the power of leverage. And so they become very attracted to it because as an asset class, because they already are invested in Toronto real estate, they see the long-term opportunity in, and if they can stretch the deposits out over time, they can passively continue to participate in the growth of the Toronto real estate market long-term.
Okay. That all makes sense to me.
Mm-hmm.
And then my last question is just to set up this topic again for our viewership today. Is there a difference between a regular residential resale agent and then an agent that does pre-construction deals?
Yeah, and that's a good question because there definitely is. The majority of agents typically will work in resale,
Mm-hmm.
and then you have a small group of agents, much smaller population, who work more in pre-construction.
Okay.
And those are the ones that try to work towards getting that platinum VIP access. And so the one thing about on the pre-construction side of agents who work on pre-construction, a lot of their business is online and it's high volume, high transactional, whereas residential real estate is much more resale, is much more relationship, long-term based. And so they're very different type of relationships. And they're very different types of agents. And what makes us in a bit of a unique situation or position is we are both. And that makes us very different from most agents in that we work on both sides of the equation. And it gives us a much larger scope in terms of what's happening in the marketplace and how to best maximize your returns.
Okay, that makes sense. And then just one more point of clarity. The agents that work the floor in a pre-construction or new build showroom, are they agents, resale agents? Are they pre-construction agents, or are they just salespeople hired by the developer?
This is a really, really good question. And thank you for bringing that out because it's something I should have touched upon is when you go to a showroom, if you can actually go to a showroom that hasn't sold out already, is that the people who are selling there, they are representing the developer and they are not representing you or your best interests. And so they're there to sell. If you're there in a showroom, you're probably looking at the remaining inventory, which is the last of the last picked over condos and floor plans. And they're there to just push inventory.
Okay.
They are not there to represent you or your best interests. Now, oftentimes they are agents, but you can actually sell for a developer and not be a licensed realtor as well. So it really depends on who you're speaking to, but regardless, they're not out there for you and looking out for your best interests. And that's something very, very important to understand. And then in the bigger picture is Toronto is one of the few markets in the world where we have this idea of a platinum agent. In most markets, you either walk in with your agent to a showroom or you just walk in and deal with another agent. So that's why there's a lot of mystique around this whole idea of platinum agents, because Toronto's one of the few markets, I would probably guess, in the world where this type of relationship exists.
Interesting. Okay, Ian, I'll toss it over to you because I know you had some questions and then we'll take it from there.
Thank you. Okay. Ralph, my first question for you is what is the significance of platinum access in pre-construction and how does it differ from the regular access? You mentioned going into the showroom, for example.
Yeah.
Right?
Yeah, for sure.
Yeah.
So going back to what I was saying earlier, because, and this is typical even in residential real estate, is our real estate market just behaves far differently than most other markets. And that is a function of one thing, demand far outstripping supply. And so when you have a market with those type of dynamics, things happen within that marketplace that are atypical from most other similar markets around the world. And so when you have a building that literally a 400 unit building that can sell out in a day or a week, and then you can have another one the week after and another one the week after and another one the week after that, that is not a typical real estate market. So what we have here is a situation where we have a lot of buyers and those buyers are far outpacing the amount of supply. And so because of that, what developers do is they have a caste system of agents that they work with. And typically a platinum agent is an agent that has an existing relationship with a developer or a sales agency that represents the developer that generally will garnish them and their clients earlier or preferred access to a project that launches. And so the way that it actually works is the first opportunity to buy will be through platinum agents and their clients. Whatever doesn't sell within a prescribed time period after launch, couple weeks, then goes to VIP agents. And then it goes to the general agent population 2 or 3 weeks after that. And then whatever's left after 68,000 realtors in the GTA have picked through it is it eventually gets open to the public. And that's why very few projects ever reach that point because of the way our market behaves and the velocity behind it.
So when you see those grand openings with all the balloons and, the street signage at a showroom for a developer for a new build, technically speaking, the developer and their platinum VIP agents have already been pre-selling before the grand opening.
Yeah, and the higher price points as well,
Okay.
because as it goes through each channel, prices go up and incentives usually start to go away.
Okay. That's really good for our viewers to know.
Could you also explain the process of securing platinum or first access and its benefits, if there's any downsides, the potential downsides, and the qualification criteria?
Yeah, it really depends upon who is representing you and their relationship with the developer. And that relationship is really based on the amount of past business that they have done or the level of trust that they have. And so it can change from project to project, let alone developer to developer, let alone whoever is selling on behalf of the developer. So that access, it's very competitive and very political, even among the platinum agents. So one platinum agent might get 20 units, another one might get 5, and another one might get 3. So there's a lot that goes on behind the scenes in order to try and get coveted access to the best units right at the earliest point in time.
So I think that exact thing that you're talking about is what we need more clarity on in terms of this idea that some agents get a certain amount of floor plans. I think we need to break down exactly what that is, because I think this is something that if you're not in the biz, you have no idea that this all goes down. And I certainly know that as an investor myself, long before I was a broker, I was like that person going into the showroom thinking I was getting a deal.
Yeah.
So can you just explain the allocation thing so that people understand?
Yeah, and every project is different with every developer. So there is no same across the board. And market conditions as well can affect this. So, and there can be a combination of this as well. But in some situation, platinum agents will get specific units. Here's this floor plan on the 14th floor, and it's a 1-bedroom plus den. And here's another floor plan on the 38th floor, and here's one on the 12th floor.
Okay.
You have these 4 to sell or these 3 to sell to your clients or to be able to offer them to your clients, but you have a very tight time window, like maybe 4 or 5 days. It's very tight. Otherwise, those units go back. The second way that these type of things can unfold is you have worksheets where your clients would put their first, second, third, and fourth choice in order of what they want to get.
Based on everything that's available in the building?
Based on what the developer is showing them that's available.
Got it.
Because the availability comes out over time. They don't just open the building up completely wide for sale. It's staggered, it's tiered, and a lot of thought goes in behind how these units are going to be released or how they're going to be available and open for people to try and get on a sheet. And then as week 1 and week 2 go by, then prices can go up, or sometimes more different units will become available. And so there's a whole process that is going on behind all of this. And it's just really key to have somebody that you trust who has this platinum access, who is going to be ensuring that you're offering on or trying to acquire the best possible floor plan.
So it sounds like a little bit of a jigsaw puzzle. So they're handing out you pieces to the platinum agents in different groups, like platinum agent 1 gets these 3 pieces of the puzzle, platinum agent 2 gets these 3 or 4 pieces, and platinum agent 3 gets these 6 pieces. And then they have those pieces to work with, and they can go out to their select clients and be like, I have these 4 pieces of the puzzle. Are you interested? And then their buyer pool could be like yes or no. And then if they are not, then the puzzle pieces go back into the jigsaw.
Yes. And then they can be opened up to the platinum agents in a worksheet basis. Or sometimes that's just how it starts in a worksheet basis, where everybody just gets their first, second, third, fourth choice based on what has been released. And so over time, sometimes the developer will have different releases as they go through the project, raising prices along with it. So that's one aspect to it. And sometimes you can even see, which is just unbelievable, is when you're offering on these, we're trying to get one of these units, they don't even have the price on them. Sometimes there's a price. Other times it's a range starting at $720,000. And then they wait to see how many people want that unit. And then they'll set the price based on that demand. And then they go to the buyer and say, okay, well, we can have this unit. I know we said it's a range of 725. We're going to give this to you for 775. And if you don't want it, we don't really care because there's 10 other people who want the exact same unit. And that's another way that these things can unfold. And all of this is just predicated on being in a marketplace where we have very strong demand for limited amount of supply.
Interesting.
My next question for you, Ralph. How does your relationship with Toronto developers aid your clients in gaining first platinum access?
It's with developers as well as with the sales teams that are running either a site or that are running the relationships, like that are running the sales side for developers. So it's a combination of both. And it really depends. Like some developers we have really great relationships and have done a lot of business with, and others that we haven't. And sometimes there's a reason for that, and sometimes there isn't. There are some developers who we would just sometimes never let our clients buy a property from. They don't have a good track record. They're not great developers. We work more specifically central and downtown Toronto. So if they're not active in our area, which is where we predominantly work, there's a good chance that we may not work with them. So we tend to focus on specific projects that make sense to us, and we don't go after everything in the city. And that's why partially we're a bit of a hybrid, because we don't work with every developer and we don't work on every project. But where we feel that there's long-term upside and the developer is a great developer, chances are that we have a pretty good relationship with either the sales side of it or the development side.
Can I ask one more question for clarity again for our viewers?
Yeah.
So you have this relationship either with the sales team, as you just mentioned, or the developer direct. Your clients are bidding on these available floor plans as they come to fruition.
Mm-hmm.
And if they do bid on it, does that mean that they for sure get it?
There is no for sure.
Okay.
At this point. It's
good question,
only
Corey.
after you have a contract in front of you and you've signed that contract and you've gone through the 10-day rescission period, which is a whole other podcast. But there are no assurances until you actually end up with the contract in front of you and it's signed.
And does this where your relationship with these developers and the marketing companies come into play and help move these along?
For sure. And what I was saying to you earlier is that it's very political. And so I think a developer and a sales team are really going to want to work with the agents who they know are professional and who that they know are going to cause the least amount of issues and ask the least amount of questions, but will also make sure that they know that their clients have all the information and that the likelihood after they sign of them firming up is very, very high. And the reason why is because they've educated their clients and their clients feel very confident with actually moving forward with the purchase, which is not the case with a lot of other agents in the city.
I think a lot of people assume that if they fill out a worksheet and that they choose a floor plan and they have platinum access and they're in early, that they're going to get that unit. And that's not the case.
Not if the developer has 4,000 worksheets for 300 units.
Right.
And that can happen.
It totally can happen.
And that has happened, yeah. It's not as much right now in this climate, but that generally is what happens for the good projects anyways.
Okay. This is very, very helpful. I hope our viewers are like paying attention because this is the stuff no one explains.
No.
And you're like, what? Like, I just remember being dumbfounded that this all happened when I got into the business. I had no idea. I was like, I thought I was like this really polished real estate investor. I was like, I know my shit. And then I was like, oh my God, I had no idea this is actually how it all went down in the behind the scenes. So super helpful.
I'm wondering, since we've kind of taken this little break to talk about that too, should we give our listeners, watchers, a quick breakdown of what a worksheet is and what it looks like here as well? Because we keep using the term worksheet, but we didn't define it. So Ralph, can you quickly walk us through what's on there and what somebody would be filling out?
It's really nothing that is committal on behalf of the buyer. It is something that is being submitted to the developer by the platinum agent or real estate agent with the buyer's information on it. It will normally have a piece of ID with it as well. So you'll have the ID, you'll have the address, you'll have the name, and then you'll have their choice of floor plan, their ideal choice of floors or floor range, and exposure if it's a floor plan type that's on different floors or different exposures.
Can you give us any instances where you've helped clients gain platinum access to projects and discuss the outcome of that?
Yeah, there's lots of examples. I think one of the ones that makes me the proudest is a friend of mine. This was years and years ago. Came to me and he said, "Listen, my son, he's about 18 years old, and he's just obsessed with real estate. He saved some money. He really wants to buy some real estate. Would you meet with him?" And I'm like, "Sure, absolutely." And I met with him and we had a really good chat. And he was very mature for his age and ambitious. And perhaps with a little bit of help from his family and all of his savings from the last 5 years, he bought a condo, the first phase at the Canary District, when you would go out there and it was just all field. And I think in that first phase, we had a bunch of buyers. Actually, Corey and I were a buyer, and we actually still have that condo today. Anyway, so he bought, I think, maybe $500, $480 a square foot, something like that. And he bought a really nice one bedroom. And 4 or 5 years later, he closes on it, moves in. He gets a girlfriend, and they start to get serious. And he ends up selling his condo and buying a house, detached house, mostly from the equity that he made from the proceeds of that sale. And he had enough left over to invest in a pre-construction condo. So from that little move that he made at the age of 18, which was a massive leap of faith, it's a massive leap of faith for anyone, but for somebody to do his age and, flip to 8 or 9 years later, and he's got a detached house and a 2-bedroom condo that he then bought pre-construction. Pretty amazing. And it's those types of stories that we have happened over and over again that I think it's really, really inspiring about what we do. And we see the power of how these type of strategic moves, well thought out strategic moves, can set people up for their future.
Mm-hmm. Long-term thinking, right?
Always.
I love that story, and I know exactly who you're talking about, and they've done so well. I'm just so proud of them.
Yeah.
And I hope they're listening so they can hear the shout out because I'll know exactly who it is. So,
oh yeah.
Aw, I love that story.
And I think the point is that I'm just thinking about it, is for them, they're still very young. And most of their friends will probably never be able to buy real estate in Toronto at this point.
So true.
Maybe.
Great.
And so the way that people can get into something that they can't get into, pre-construction offers a really good option as an investment and maybe even as a long-term potential end user at some point in time.
Yeah. Huge.
Yeah,
Huge
great forethought
Massive.
on the part of that young guy. I feel like you should get him on here for an interview for one of these one time
It'd
soon.
be awesome.
He would love that. He'd be so great.
I'm sure he would.
That's a really, really good idea, Ian. So perhaps, because I know every developer and marketing company handles this differently, but you filled out a worksheet and then you actually are allocated a unit. So that means that the developer and or the sales offices have said, "Hey, Ralph, Mr. Platinum Agent, you and your client have been awarded, in this sort of bidding process per se, even though it's not technically like residential resale. We want to grant you, bedroom number 4 at this particular building." And then you're like, "Oh my gosh, amazing. I got a unit. Now what happens?" So like you get this unit, you've filled out all these worksheets, you've given ID, you've looked over the floor plans, you've had lots of conversations, and then boom, the next thing you know, they tell you you've been given this unit. Then what happens in this whole process?
Typically, you would, in very short time, get an agreement to sign.
Okay.
In this post-COVID world, it used to be prior, everything was done in the developer's office with pen and with pen in hand and paper. And now it's all done digitally. So they will send you this contract, usually within a short time window. And if you don't sign within that time window, it goes to somebody else.
And what is the time? What is the time window? Kind of like a day?
It can be within hours.
Oh, hours.
Yeah, you'll have an appointment where it's sent to you and then you sign. And then you don't really read it, obviously, because it's like super thick. If it were printed, it would be literally this thick. But you sign it, then the developer executes it, and then you get it back. And just preceding that, you would have had to have given a deposit check
Okay.
as well to the developer, which is usually about $10,000, $5,000 to $10,000. That's a check that the developer holds as good faith until your deal goes firm. You have the 10-day rescission period. So in those 10 days, you can review the documentation with your lawyer. And also, you want to make sure that you can get a mortgage pre-approval that will satisfy a developer's requirements within that 10-day window. And so those are the two real things that you're doing, presumably in addition to not white knuckling or freaking out or reading articles, talking to neighbors and being like, oh my God, why did we do this? Literally, you would have been given this a lot of thought and due diligence in advance, and that you knew that this was a great opportunity and you were just dotting the I's and crossing the T's within that 10-day window.
Okay. So just to recap, you're allocated this one bedroom. The developer would call you and say, Ralph, your client's been awarded this one bedroom, ABC. And then your client has a short window of time, maybe a couple hours or a day, to decide if they want to sign the agreement of purchase and sale. And if they're like, yes, I'd like to go ahead, it likely is sent to them electronically. They would quickly sign it, make sure that the deposit check is with you and the developer. And then at that point, after the agreement of purchase and sale is executed by the developer, that point is when this 10-day cooling off period and or also known as the rescission period kicks in.
Correct.
And the buyer can decide after they've reviewed the documents with their lawyer and talked to their mortgage lender, if they, for whatever reason, they feel uncomfortable about something, they can turn the unit back to the developer. And what happens with the deposit?
Well, they can walk away without any recourse whatsoever. They don't even have to give a reason.
Okay.
They just say, we're not moving forward with this purchase within our 10-day window. And to point out is that 10-day window is by law in Ontario. So it's not specific to a developer, a project, or a contract. That is the law of the land in Ontario.
Okay.
So people can cool off after they've bought something. The check never actually really gets cashed by the developer. They just hold it in their files, and they only cash it or put it into the lawyer's trust account. Those checks are made out to a lawyer's trust. They only put it in the account if and when the contract goes firm.
Got it. Okay, this all really makes sense. So, what is the financial benefit to buying pre-construction? And is there a significant financial advantage because we're specifically talking about the platinum process today? If so, what does that look like for our viewers that are tuning in?
So first of all, with a lot of projects, central and downtown Toronto, if you're not buying from a platinum agent, you may not even have access to even know that a building is even going for sale.
Okay.
So that's the first thing. You get early warning, you get early access, you maybe get the only access to a project even possible. And additional to all of that, as time goes on and the project gets more exposure to a wider and wider market, the developer will raise prices.
Mm-hmm.
The developer may take away incentives and may augment the deposit structure, making it more tighter and less incentivized to buy early on. So early buyers are incentivized and rewarded for being early buyers.
Yes.
And oftentimes those are generally when you have optionality to get the best floor plans. And as we've talked about in past podcasts or video casts or boots on the ground casts or whatever cast you want to call these casts, is floor plans and layout really, really matter. And you can have 500 square feet feel much bigger than 700 square feet just based on how it's laid out. You can have even 500 square feet feeling nicer than 1,000 square feet based on the layout, the walls, the natural light, and all of those other considerations. So it's really a function of, first of all, even having the option to purchase. Second of all, within that optionality is being able to secure the best floor plan at the best pricing with the best possible incentives.
Okay, super helpful. And then for additional clarity on this, so you had mentioned that in the 10-day cooling off period or rescission period, that
Mhm.
your documentation is reviewed by a real estate lawyer, and then you probably want to speak to your mortgage broker and then get a pre-approval. So what confuses our clients and probably a lot of the people tuning in is, okay, you get a pre-approval for something that's going to be built in 4 years. So like, you might not have a job in 4 years, or you might be divorced in 4 years, or your debt score ratio is going to change in 4 years. How does that play into the mix, and why is that important?
So a couple things. Number one, I want to take a step back because in that time period, there's two aspects. There's the legal aspect, the financial aspect.
Okay.
On the lawyer side of things, it's really, really, really important to have a lawyer that specializes in pre-construction and understands the process and is not an out-of-town lawyer or is not a lawyer who doesn't do these type of contracts because they're very specialized. And as a buyer, the two things that you want to clearly understand from your lawyer is what are you legally obligated to? What are you committing to legally? And number two is what are all the above and beyond costs above the posted price? Because generally, when it's all said and done with land transfer and development costs and everything else, you could be looking at another 10%. So it's very important to understand what that number is going to look like to make sure that you have that money put aside 3, 4, 5 years down the road, because you don't want any heart attacks. We don't want any heart attacks.
I've had many of those.
We don't want anyone to have any heart. So that's the legal component to it. The financial component is different. So one of the things that we have to understand is that when a developer builds or goes to market with a project, they get funding in stages. And so a developer cannot put shovels into the ground. Just like my shovels in
I like it.
shovels
Like a
in
transformer.
the ground. Yeah, exactly. Can't put shovels in the ground until a project is 80% sold. Once it's 80% sold, they then go to the bank and say, hey, Mr. Bank, please release our construction financing. We're ready to go. The building is 80% sold. A lender is going to want to know, they're going to say, yeah, okay, great. You've sold 325 out of 400 units. That's awesome. But are these deals real and are they going to close? And so the bank will make the developer provide them with documents in the file that shows the financial covenant of these buyers is legit. And the way they do that is by getting the purchasers to submit their financing documentation, a pre-approval. Now, the thing is about these pre-approvals, it's very different from your standard residential resale pre-approval, which typically are good for 90 days, because these pre-approvals are good for 4 years. And so, however, they really aren't, because there's a caveat in that approval that says that at the time of closing, the buyer will have to reapply anyways.
Yes.
And the reason why the developer needs this is because the bank needs it. And the reason why the bank needs it is to see on this given date and time, will this individual or individual buyers or entities have the financial wherewithal to close? And a lot of banks will not give these future dated pre-construction type pre-approvals. Some brokers can get it done for you, and some banks can get it done for you, and some bank managers can get it done for you, but it's not a ubiquitous slam dunk. So you really want to make sure that you can have the relationship with the right lender or people who have access to the right lenders to get you a very specific pre-approval that needs to be in a specific way that will satisfy a developer and a developer's lender, knowing that this is a condition that has to be followed through with in your agreement of purchase and sale and in your commitment to the developer. I think it's generally like 90 or 120 days after going firm. So you better make sure you're in a position to get that document if you are going to firm up on an agreement of purchase and sale that's pre-construction.
That is very valuable. Thank you for explaining that.
No problem.
And then one more question on the finance side. I love asking you questions like this. We could do this all day.
Yeah.
So
do it over dinner tonight.
We could. Let's talk about work, Ralph.
Yeah.
We
Maybe you do
never
need
do
that
that.
camera in your house.
No, no.
We never talk about work.
Yeah.
Okay.
Turn the camera back on.
So this is going to provide clarity for those tuning in. So I know that one of the biggest advantages of buying pre-construction, at least for me and yourself over the years, are the spread out deposits. So can you just better explain that in more detail? Because I don't think people understand this, and
Mhm.
walk us through what a typical, and I know it changes depending on the developer's marketing package, but
Mhm.
what a typical deposit structure would look like and why that could be advantageous to a buyer.
For sure. So I think the first thing to do is give a little context. When you buy resale,
Mm-hmm.
especially if you're buying over $1 million, but even if you're buying less than $1 million, you need 20% down, plus the land transfer taxes, plus all the closing costs. And you need to have all of that ready today,
Mm-hmm.
like right here, right now. In pre-construction, that's not necessarily the case at all. So usually you will have a $10,000 check that you will have to write before firming up.
Mm-hmm.
Presuming you do firm up, that check will then be cashed or put into the bank. And then you will have, generally speaking, on day 30, you will have 5% payment
Mm-hmm.
less your original payment of $10,000.
So 5%
So
of the offer price or like the purchase price.
correct.
Okay.
5% of the purchase price less your deposit, which
Okay.
is generally $10,000. Then you could have one in 90 days, another deposit within 90 or 180 days, and then a third one within the first year. So it's spread out in increments of 5% over a time period. Generally, it's 15% in the first year.
Mm-hmm.
Sometimes it can be in the first year and a half. Sometimes it can be broken down in increments of 2.5%. But usually you've got that 15% in the first year to maximum 2 years. If you're 2 years, you're really doing well. And then the 5%, the remaining 5% is generally on occupancy or on close date.
Okay.
Some developers will require it prior to that date, but usually it's that 15% within the first year to year and a half. And the advantage that you then have is you can stretch it out further by a line of credit and then paying that down slowly over time as well, because you don't have to have proof of funds or show proof of funds in the way that you would if you were buying pre-construction. So if you're trying to get in the market and you don't have all that money, but you know that you're going to be increasing your income over the next few years, or your income is growing up, then you start to become in a more advantageous position to look at this type of an opportunity.
And it's almost like a forced savings plan. So
Yes.
you're like, okay, I've got the first 5%, but I know that in 90 days, I need a second 5%. So it forces you to look at your finances and be able to tuck that money away so that you can pay those deposits. In worst case scenario, if you don't have it all in cash, you can lean on a line of credit and then work towards paying yourself back.
And there's always Bank of Mom and Dad as well.
Well, for some people.
Yes.
I don't know if
But
any of us get to go
be
and
an option.
yes.
No. We're Gen Xers. We're old school and hardcore.
Oh my God. Yeah.
But I think that's really good way to explain it. And it's much different if you're just putting money into an RSP, or it's much different if you're just putting it into a bank account or under your mattress. When you know those post-dated checks that you've written are coming out no matter what,
Mm-hmm.
and you can walk by and see cranes in the ground and they're building your new investment or your new home, what greater motivator is there to try and make sure that you have the funds available so that you can get somewhere where you're unable to get currently?
Okay.
And it's an amazing, amazing opportunity. And as you pointed out, motivator to take the next leap.
Okay. I love this. And then my last question, just related to this particular
Yeah.
group of questions, is you mentioned that developers and the marketing companies kind of have pricing tiers. And so the
Mhm.
prices go up over time. So they first
Mhm.
release units to friends and family, then to platinum agents, then the VIP agents, then the general agents, and then the public. During each release, I guess, to these different segments, the prices are slowly escalating and increasing. What
Yes.
is an example, or how much approximately are the units going up over
It can
time?
change. It can change from project to market to market. So I don't think that there's a specific amount. Sometimes it could be as little as a few thousand, and other times you can see jumps of $25,000, $30,000. And what it does is it rewards the people who bought early because they've just bought and they're like, wow, I've already made
Right.
theoretically 25 more
That's
thousand
exactly what I was going
dollars.
to say.
The developer controls the market, and the developer also is holding back on units for themselves, most likely. And so they're building the value of the building as they go. And where you'll see that on a bigger scale is at master plan communities. If you look at Galleria or Canary District, where you see the first building goes for this price per square foot by the time it's done. The next one is higher, and the next one is higher, and the next one is higher. So the people who bought in early in these master plan communities have also done very well on a bigger scale. So generally speaking, as long as you're buying from a really good developer in a good location, you're going to do very well over time. The earlier you're able to buy in and secure a unit in the process.
And then one more point of clarity on that, because this is, again, very helpful. Are the developers marketing and selling the units at today's prices, or are they selling them for the projected sale price when the building is built?
They're selling them with a combination of factors. And this is something people don't understand in this world of, trying to have greater affordability in real estate. 25% of all pre-construction homes, the cost
Mm-hmm.
is taxes. So the taxes have to be built out. And as we all know with
The taxes for the
inflation,
developer.
no, the taxes that the developer is being charged by the province
Yeah,
and the
that's what I mean.
municipality, those are being passed on to end
Okay.
purchasers. So you have the taxes that are built into
Yes,
that.
that's exactly
Then
what I
you
meant.
have the cost to build, which is escalating. I don't even understand how a developer can think about what the cost to build is going to be like in a couple of years. Those pro formas must be just crazy to try and put together. They're looking at a whole bunch of factors, but they're trying to take the market factor projected in 3 to 5 years into the equation as well. As is a potential buyer thinking, okay, the market's at $1,200 a square foot today. I could buy this at $1,600 today. What would the potential price be like in 10 years when I'm going to turn around and sell it? So there's a lot of different ways that people, investors, developers, salespeople look at these numbers. But going back to what I said originally, from an investment standpoint, it really goes back to buying futures on the stock market, buying at an elevated price with the belief that theoretically prices at a future date are going to be a lot more higher than that cost to acquire.
And generally speaking, and let's just say a downtown project's released. And when I say downtown, I mean like the core.
Yep.
Whereabout is it in terms of market price today, price per square foot for new construction in downtown Toronto?
Yeah, you're looking $1,600 a square foot.
Crazy.
And in the ultra luxury, you're over $2,000 a square foot.
Oh my gosh. I think the first pre-construction I ever bought was like $375 a square foot.
Yeah, but at the time,
I know.
must
I
have
was
felt
barfing.
like
I know.
it must have felt like $1,700 a
No,
square
I was
foot.
like
Felt
shaking.
like.
I shook the entire time.
Yeah,
I signed that
yeah.
agreement of purchase and sale in the showroom because remember I mentioned I had no idea there was such a thing as platinum. And when I was one of those people buying from the showroom from some woman. And my hands, when I signed that thick agreement of purchase and sale, my hands were shaking so much. And when I wrote out the deposit checks, my hands were shaking so much. I was petrified. And to me, yes, I agree. It was a huge amount of money for me at the time. The
And how'd you
375,
do?
but it was a good story.
You did pretty well in the end.
Pretty well.
Yeah.
Very happy.
Yes.
Okay, this is great. This is great. Ian, did you have additional questions about this?
Yes, absolutely. Ralph, my first question for you, what factors can ensure our preferred unit choice and layout, and what customization options are available for platinum buyers?
There's not a ton of customization options that are generally available. It is very much, it is what it is. I remember when I first got in the business, there was like 17 different color palettes and options and this type of countertop and this type of countertop. Generally, you get three: dark, medium, and light. And you just pick a package, and the developers want you to pick it well now in advance of being built, because it takes a long time to procure and put all these things together. So you're not given a ton of optionality by any sense of the word, nor are you given very much negotiating room. When your lawyer reviews the contract in the early days in the business, the lawyer could like request for changes and all of these things. Again, it's very much now take it or leave it. So not too much room for negotiating or customization. It depends on the scenario. If it's an allocation and your agent is like, here, if you want this, you can have this, much more of a slam dunk scenario. If it's a worksheet type of situation, then you're hoping for the best. And you're hoping that your agent has a strong enough relationship or can be persuasive in the moment to try and get you your first choice. But the earlier you get in and the better the representation you have, the better on both fronts, for sure.
So we've established that there's not really any customization for the unit, and you're just lucky to get a unit, it sounds like. And you probably might not even get your first choice of unit. From the platinum perspective, again, I just want to keep reminding our viewers today that we're speaking about the platinum process. Are there any incentives for buyers when they first invest at the platinum tier for pre-construction?
There can be incentives in terms of price, meaning knowing that you're getting in at the earliest price.
Okay.
And there's incentives knowing that you're going to get or likely have the best options for the best floor plans. And similarly, you can also generally expect to have the best deposit structure or the most incentivized deposit structure. And sometimes there can be additional incentives like you don't have to pay for an assignment or various other little things that can be thrown in. So, and you don't know when they're going to be taken away or how long necessarily they'll last for, but they are there oftentimes for generally a limited period. And sometimes the developer will tell you this is only for platinum agents or what have you. But there can be various levels of incentives depending upon the project and the developer and the time in the market.
So sometimes you'll see like free locker or, 5% off price parking or something like that. So we've covered a lot on the platinum agent side. Is there anything we missed that you feel that our viewers should know about platinum access, and anything we didn't really address? Because I feel like we covered a lot, but I want to make sure that we got all those little gems and nuggets covered here, because there's lots of things we could cover regarding pre-construction.
I think it's really important, if you're an investor or buyer, to work with somebody who you feel you can trust, who has your best interests at heart. And if they're a platinum agent, to make sure that they are advocating on your behalf at all times, because that's not always the case given how transactional this part of the business generally is. And the other thing that I would really just recommend that people be careful of is there's a lot of agents out there who will tend to represent themselves as being the developers themselves through their websites and online presence. And you really want to make sure when you're communicating with somebody to know whether you're communicating directly with the developer or with an agent who is representing themselves, but really positioning it as though they're representing you via the developer. So it can be a really bit of a Wild West aspect to real estate. And it's just really important to make sure you have somebody who's guiding you into the right projects with the best developers in great locations. And, you really want to make sure that you're not overpaying for something that you should be buying meaning, you're buying at the right time and you're buying the right project at the right place.
That's very helpful
If that
advice.
makes sense.
No, it totally makes sense. It's super, super helpful. So the next time we talk about pre-construction, Ralph, where would you want to guide the conversation for a future episode? The advantages, the disadvantages, like where do you think what would be helpful for our viewers next?
I think the pros and cons is like an entire episode. The difference between buying pre-construction and buying resale and the advantages and why buying pre-construction can be extremely lucrative and why, even though prices are quite expensive today, into the future, why they could still look like a great deal, just like the gentleman we were talking about when he bought when he was 18 or when you bought where you were 19 at $350 a square foot. Like these things are really important to take into context. And I think having that context is super important when looking at making this type of purchase.
Okay. We'll definitely do that specific episode because I think people out there really want to understand this as an asset. And I think there is a lot of confusion about this. And I know that on our website, this is a big area that people spend time on our blogs reading about, trying to make sense of it. So if there are questions or comments or further episodes or topics our viewers would like us to explore regarding pre-construction, please put them in the comments because Ralph is a wealth of knowledge when it comes to this particular vertical in the marketplace. And Ian and I both own many pre-construction units ourselves. So we can definitely add some additional clarity and color on the topic. So this has been very informative, Ralph. Thank you so much about the platinum process in specific. I'm really looking forward to putting this out there just to help people move along through all of this and guide them in the appropriate way. Ian, would you like to close us out today as you always do such a wonderful job?
Thank you, Corey. Well, everybody, there you have it, a deep dive into the world of platinum and first access to the pre-construction condo market of Toronto. I'm sure we all now understand just how crucial relationships, timing, and the right information can be. Ralph has certainly opened our eyes to the intricacies of securing that coveted early access, revealing both the potential rewards and the pitfalls to be wary of. As we wrap up, remember that every investment opportunity must be approached with diligence, a clear understanding of your financial capabilities, and the right expert guidance. So stay tuned for a future episode where we take a closer look at acquiring pre-construction as a smart investment vehicle. And all of us have expanded our personal real estate portfolios through this method. And don't forget to tune into Corey's latest video that outlines the top 5 advantages of buying pre-construction. We will include a link to that below in the show notes. So look for that. And that's it from me. Corey, what do you like to tell all our viewers at this point?
Oh, I love to tell them to contact us because we're nice. We're super nice.
We are nice. We are super nice. Absolutely. And Ralph, what are we doing?
Well, other than smiling to appease our focus group, I would like to tell everybody, thank you for making it to the end of our pre-construction journey from the platinum side of things. And to please hit that subscribe button down below. And if you have any questions or comments or want to reach out or tell us that Corey's really nice, please do so because we absolutely love to hear from you.